Mr. BVR Mohan Reddy, Chairman and Managing Director, Infotech Enterprises, joins us now to discuss the first quarter results and also his outlook for FY11. Mr. Reddy, thank you so very much for joining us on the show. First off, what led to revenue growth this quarter? Was it engineering design or GIS services?
Quarter came primarily because of our engineering services business. It grew by more than 10% quarter on quarter. But then we had two challenges. One is, of course, with the foreign exchange. And the second one was the degrowth in our UTG business. So it's a combination of both of them, which resulted in still a 6.5% growth in constant currency terms, or about 3.6% on rupee terms, or in dollar terms, I believe it's about 4.2%. So we still saw growth, largely led by the engineering services, but because of the foreign exchange challenges and also challenges associated with our UTG business, we saw a marginal growth as opposed to a bigger growth.
Right. Mr. Reddy, you mentioned foreign exchange challenges. We understand that the Europe crisis has indeed hit you hard. What sort of impact have you seen this quarter?
Well, it has definitely, yes, because we have a fairly large amount of exposure in euro as well as British pounds. If you look at our business from Europe itself, it was about 97 crores for the quarter one compared to 104 crores for the previous quarter. So when you'll see, oh my God, there's a 6.7% degrowth in your business. But you look at the foreign currency variation that has happened, actually during that quarter, euro itself degrew by 7% and pound degrew by about 5%. And you look at the weighted average, it's almost like 6.5 or so. So our degrowth in our European business is no reflection of volume degrowth, but it's primarily because of the foreign exchange.
Right. Now, Mr. Reddy, your profit plunged in the quarter. EBITDA margin fell 557 basis points quarter on quarter, primarily on account of wage increases, isn't it? Now, can you break it up for us? What were the factors that caused this kind of a fall in margins?
No, not necessarily. It is only because of wage hike. It also had an impact because of the foreign exchange fluctuation. As I said earlier, if you look at constant currency terms, we grew by 6.5%. But because of the 2.9% foreign exchange fluctuation, our growth was limited to about 3.6%. Now, certainly, that volume growth, if it had been continued as it is, then we would not have had major challenges in our margins. But because the foreign exchange issues that came by, we had challenges in our margins. Now, certainly, yes, what you said is right, that the margins were under further pressure because of the wage increases. For our offshore employees, we increased our wages by about 12.5% to 13%. Our onshore has been increased around 3%. A combination of that had definitely put a sizable amount of pressure. The pressure was about 300 basis points to 320 basis points on our margins. And the rest of the increases in the cost structure, be it data communication, be it the power bills itself, these are some of the other costs which put pressure on our margin. But typically what we have seen also is that the costs always run ahead of revenue. So therefore, if the volume growth, as we are projecting at this point of time, comes back, we certainly think the margins will also come back.
What's your outlook for growth in FY11 and what will be the major drivers of this growth?
Qualitative outlook for the year, certainly US is looking good for us. Certainly the pipeline in US and some of the deals that we are at this point of time working on is very strong. Added to that, for last financial year, the fag end of the last financial year, in engineering we won 3 deals. One was Westinghouse nuclear power plant engineering. The second one was Hamilton Sunstrand electronic design and embedded software. And the third one was Seawell, which is in marine offshore platform design. So all those 3 will certainly see traction in the current year. So a combination of the deals that we won in the recent past, our existing customers, and potentially new customers we are acquiring, certainly makes us believe that there is a volume growth definitely possible to a much greater extent this financial year compared to what happened last year. Last year, in spite of all the challenges, we still had about a 7% growth, but it will be far higher than the 7% growth we saw last financial year. Further, in terms of the margin part of it, which you talked about, I guess the volume growth will certainly help us. But more importantly, if we can probably see a certain amount of price increases, which are possible, because as much as we did not give salary increases in the last year, we also did not get price increases from our customers. The price increases, better utilization of our resources, and resizing our employee pyramid, these are some of the drivers that we will have with us in order to bring back the margin.